In today's global economy, things move so fast, right?
Yeah,
Capital flows everywhere.
absolutely. It's incredibly interconnected.
And how companies report their financial health in that environment is, well, it's critical. But the rules, they can seem like a total maze.
Uh-huh. Definitely dense.
So that's why we're here today. We want to cut through some of that complexity, looking at two key sets of accounting standards, IAS and IFRS.
The International Accounting Standards and International Financial Reporting Standards, yeah.
Our mission really is to pull out the crucial insights for you from the sources, give you a clear path to understanding what you really need to know.
Sort of the essentials for navigating things right now.
Exactly. Whether you're, an accounting student, maybe just interested in finance or running a business, this should help you get a quick handle on these core ideas. So let's get into it.
Sounds good. And you're right, this isn't just like technical stuff for accountants.
No.
No, these standards are really the foundation for trust and transparency. Investors, regulators, businesses, they all rely on this. So understanding their journey, where they came from and where they are now, it's pretty key to understanding modern finance.
Okay, so let's do that. Let's turn back the clock a bit. When we talk about IAS,
Yeah.
what exactly are we talking about? What's the background there?
Okay. IAS stands for International Accounting Standards. Simple enough.
Right.
These were the foundational standards. They were first issued by the International Accounting Standards Committee, or IASC.
IASC.
That started back in 1973, and they kept issuing them until 2001.
And what was their main goal?
Well, it was pretty ambitious for the time, actually. They wanted to bring some consistency, much-needed consistency, to accounting practices across different countries.
Harmonization, basically.
Exactly, trying to harmonize how companies presented their financials. So, someone in London could hopefully understand a balance sheet from Tokyo a bit easier.
Makes sense.
And it's kind of amazing when you think about it. They issued standards from IAS 1 right up to IAS 41. Covered a huge range: financial statement presentation, inventories, cash flow, even things like agriculture.
Wow. Okay. So quite comprehensive for its time.
Definitely laid the groundwork.
But then things changed. The financial world evolved, and IAS gave way to IFRS.
That's right.
What drove that transition? Was it just a name change or something deeper?
Oh, it was much more than just a name change. That's a really good point.
Yeah.
IFRS, International Financial Reporting Standards, they essentially took over from IAS starting in 2001.
Okay.
And these new standards are issued by a different body, the International Accounting Standards Board, the IASB.
Which replaced the old IASC.
Exactly. And the why? Well, the world in 2001 looked very different than in 1973. Much more digital, much more interconnected.
Global supply chains, complex finance.
All of that. Multinational mergers becoming the norm. The old IAS framework, while, like we said, foundational, sometimes struggled. It could be a bit too prescriptive, too rules-based for these new complexities.
So IFRS was really created to adapt, be more flexible, and try to truly unify global financial reporting in a way IAS couldn't quite manage.
So how would you summarize IFRS then?
I'd say it's aiming to be more global, definitely more current, and this is key, more principles-based.
Okay, that distinction, rules-based versus principles-based, that sounds really fundamental. Can you break that down a bit more, and what are the other key differences we should be aware of?
Absolutely. Because beyond the dates, these are the critical distinctions. First, like we said, the issuing body, IAS from the IASC, IFRS from the IASB.
Got it. Different groups in charge.
Right. Second, the naming convention. That actually gives you a hint.
How so?
Well, if you see a standard like, say, IAS 16, that's for property, plant, and equipment, it's one of the older ones.
Okay, from the original batch.
Pretty much.
Yeah.
But an IFRS number, like IFRS 15, which covers revenue from contracts with customers, that tells you it's a newer standard, issued under this updated framework.
So the names are almost like a historical tag. Precisely. Yeah, a good way to think of it. Third, and this is arguably the most significant difference, is the approach.
The rules versus principles thing.
Exactly. IAS often tended to be more rules-based. Very specific instructions, detailed guidance for lots of scenarios, almost like a checklist sometimes.
Okay.
IFRS, on the other hand, is more principles-based. It provides overarching principles, objectives, not so many rigid rules. It means it encourages professional judgment when you apply the standards. It makes them more adaptable, hopefully, to complex situations or new types of transactions that maybe weren't thought of when the rule was written.
Can you give an example?
Sure. A big one was when IFRS 15 replaced the older IAS 18 on revenue. It wasn't just a minor update, it was a whole new way of thinking. Companies had to look much deeper at the economic substance of their contracts, not just follow a prescriptive list.
That principles-based approach. It sounds more flexible, definitely more adaptable, but does it maybe introduce more subjectivity compared to the old IAS rules?
That's a really sharp question. It absolutely requires more professional judgment, and yes, some argue that could lead to more subjectivity.
Right.
But the IASB tries to counter that. They require much more extensive disclosures. Companies have to explain the judgments they made.
So transparency is the counterbalance.
That's the idea. Explain the why to balance the flexibility of the how. And then the final point is really about updates and evolution. IFRS is designed as a living framework.
Constantly changing.
Well, evolving, let's say.
Yes.
Some IAS standards are actually still active, the ones that haven't been directly replaced or superseded.
Okay.
But many have been replaced or significantly updated by new IFRS standards just to keep pace with changes in business and the economy. So yeah, IFRS isn't just a new rule book. It's really a different philosophy for global financial reporting.
That really helps map out the journey and the key distinctions. So let's bring it back to the listener. For you listening, why is this deep dive into IAS versus IFRS actually critical? Why should you care about this history and these differences today?
Well, look, for anyone involved in accounting or finance, understanding both it's just essential. It's not really optional anymore.
Non-negotiable, you'd say.
Pretty much. You absolutely need to know which standards apply, where, how they've changed over time, and crucially, how to interpret and implement them correctly in financial reports.
Right.
Think about a multinational company maybe buying a subsidiary overseas.
Okay.
Being able to smoothly integrate their financial reporting. That depends entirely on having a solid grasp of IFRS. You can't just know your local rules anymore.
You need the global picture.
You need the global picture. And knowing this whole ecosystem, IAS and IFRS, it doesn't just keep you out of trouble compliance-wise. It genuinely expands your career options. It makes you a much more versatile, more valuable professional in today's globalized finance world.
Yeah, that makes a lot of sense. So wrapping up the core difference then, IAS really laid that vital foundation, the first attempt at global standards.
The groundwork, definitely.
And IFRS is actively building on that, constantly shaping how financial reporting works in this, super interconnected world we live in.
That's a great summary.
And clearly, there's always more to learn here. This field keeps evolving, so staying current. It's not just a good idea, it's really a necessity for anyone in it.
Absolutely. Keep learning. And maybe something for you to think about after this. Consider how these standards have evolved, especially that shift towards principles we talked about.
Okay.
Think about IFRS 9, which covers financial instruments. How do you think its approach might differ from the older standard it replaced, IAS 39? What might that difference tell you about the IASB's ongoing focus on, let's say, economic substance over just the legal form? Something to mull over.
A good question to ponder.
Definitely. Keep learning, keep questioning, and stay relevant.